Hey everyone, this is Kirk here again at optionalpha.com, and this is the trading alerts update for the members here. Again, what we do here every night on these trading alerts is go over all the trades that we made here today just for members. If you're seeing this video on YouTube, it's because we've posted it 5 days later than everyone else, so you actually get to see it later. And if you want to see these alerts real time and get real-time updates, like we always say, go check out our website at optionalpha.com and sign up for the membership. So in tonight's video, I want to go over just the one closing alert that we had today, and then we had two new opening trades. And you can see that every day this week, we've kind of gotten less and less active because we made so many trades on Monday and Tuesday. So with this opening alert that we have, these two opening alerts here today, really just kind of drives home the fact that we have some really great volatility. And so we want to take advantage of that with those. So let's get into the one closing alert here first before we get into those opening trades. We bought back the vertical or the butterfly that we had on X, which is US Steel, and that's a ticker symbol right there. So we bought back that butterfly. It was the 27, 28, 30 call spread. So you can see it was a broken wing. We skipped that 29 strike, and that's where we get the broken wing. And we bought it back for a debit of 26 cents. So we made a $43 loss on it. It was a fairly small loss when you look at the big scheme of things, but really what we expected US Steel to do, or ticker symbol X, was to trade much higher than where it did. We thought it was going to come back down, and it did, but it really has kind of been range bound for the last month, and we thought it was going to go a little bit higher. So no sweat though. We closed out the trade here today. We're getting close to December expiration, so one of the strikes was now in the money, so we went ahead and just closed out that trade for a small loss. The two trades that we opened up here today, the first one I'm going to go after is this vertical spread in Ford. And you can see ticker symbol F here is the ticker for Ford. We sold 5 verticals, the 16-17 call spread. So again, we sold the 16 calls and bought the 17 calls. Took in a nice credit of 25 cents on the whole trade together. And the reason that we did that is because Ford had a nice big gap lower today. And you can see up here in the left-hand corner, even though it's yellow right now, implied volatility is at the 54th percentile. And so what that means is that it's above that magic 50th percentile number that we need to start selling option premium. So the reason that we sold the calls versus the puts, and this is, again, just a preference on our end, and again, strategy over direction, we could have easily sold the put spread as well. But the reason we sold the call spread is because we think with this gap lower that Ford will probably come up a little bit. I do expect Ford to bounce, but I think that it will continue lower and it'll trade in the direction of the gap. Again, who knows what's going to happen? We're just trading the odds here, but that's the trade that we made, is to trade that move up right now, but also a move much, much lower as we get towards January expiration, and then also a condensing of volatility. This is a big move for Ford. A big major change today. Was down 6% on the day, so it's bound to see some sort of volatility contraction as we get closer. I want to actually go to the actual underlying here and look at the actual trades that we had for Ford. I'm sorry, that was for February that we entered that position, the February, not January. But the actual underlying trades, you can see here that even this 16 strike, which is just out of the money right now, and it kind of rallied a little bit as we entered the trade, but originally today, this 16 strike February call option, which is really the one we're concerned about, still has about a 35 to 38% chance of expiring in the money. So it's only about 40 cents away right now, and you can still see the probability that we're going to lose on this trade. So it's a fairly good risk reward trade, probably not the best premium we can get, but Ford was very active today, tight bid-ask spread, so it was very liquid and easy to get into. You can see 26,000 contracts traded today in both of these two strikes, the 16 and the 17. So we could have easily, again, gone to the put side. In that case, we would have sold the 15-14 put spread, and you can see that that has a little bit higher likelihood of being hit, only because, again, of this gap and this higher implied volatility. Ford is much more likely to move lower in a faster fashion than it is to move higher very quickly. So again, that's the reason that the put side has a little bit more of that kind of embedded probability that it's going to go much lower. So if we get to this last one, this is, again, just another play on volatility, and these are working out really nicely. We have a couple trades on the VIX where we're just buying some long put vertical spreads, but this was another interesting one where we actually had a chance to sell a vertical call spread in VXX, which is a volatility index here, our volatility ETF. And so we sold the January 49.51 calls for 53 cents. Now again, these are 2 strikes wide, the 49 and 51. So we're selling a pretty decent premium for a 2 strike wide option. And you can see when we go to the chart of VXX that these are actually fairly far out of the money. And we had a huge drop in volatility today after the Ben Bernanke Fed meeting. But you can see our strikes up here, 49.51. So we have a good out of the money spread here. Implied volatility had really contracted today when we actually entered this position. You can see it's at 2 now, and it was above 50 earlier today. So major contraction in this one today, and this is really what we're looking for. So it's already showing a nice profit. We'll definitely hold this one for a little bit longer and probably exit it early, considering it's going to show a bigger profit much earlier in the cycle than it would usually. So the other thing I just wanted to touch on today, that's it with the trading alerts, but wow, what a huge day in the Dow. We saw a monster move in stocks, quite a big reversal, and kind of really took out the old highs that we were dealing with. So for now, I think the trend is going to be up. So we're going to start to kind of transition our portfolio here, start to get rid of some of our short plays, get on a couple more long plays here this week and next week to take advantage of some of this positive delta that we've been kind of building up. We have had a great time with this kind of mini correction that we had here in December, and now it's time to start positioning for a move higher in the market into January and the new year. So as always, hope you guys enjoy these videos. If you have any questions, please add your comments to the section below, and happy trading.